Hey everybody, this is Dimmick with CustomInsured, and my partner Cal Burgess and I are back here again for another kind of webinar video that we want to create. And we want to try to have these things be topical and timely and relevant to people. So something we want to talk about a little bit today. Obviously, we're all familiar and aware of this pandemic, and even a lot of people personal experience with losing their health and coverage or at jeopardy of losing their health coverage as a result of furloughs and layoffs. So that's really kind of the topic we wanted to touch on a bit today. So with that being said, I'll kind of give Cal an opportunity to chime in here and kind of a transition to the next part of our talk here.
Thanks, Dimmick, and that's exactly what we do. So just to kind of add on to what he had said, we want to be able to show small businesses viable options moving forward for group health plans, options that control costs and, of course, are flexible in nature. In this particular episode, we'll be talking about the flexibility of the plans we offer and how they all come together, especially when you're talking about layoffs or furloughs. One of the things that come to mind when I hear furlough is I think of all the the airline industry employees. I've got a good friend of mine that's a pilot, and he doesn't know what's going to happen from one week to the next. So with that being said, typically what happens is an employer will ask an employee to stay on or hang around, so to speak, until activity picks back up, and they can or cannot be issued coverage, or they will or won't be issued coverage depending on the scenario, size of the company, or how it's structured. So there may be times in a pandemic where you as a small business may have to downsize until more business comes in the door, but instead of having to recruit new employees, you may want to keep the same ones you have on staff, although you're going to have to be mindful about what your costs are. So that's where our flexibility comes in. What Dimmick and I try to tell employers every time when we're sitting down with them is if things get tight and you have to make adjustments to coverage, we can take off or add on as much coverage as we need to, making these plans flexible. So if that conversation ever does have to come up where an employer has to let a few employees go or quote unquote furlough their employees moving forward, we can give them options to maybe even cover hospitalization and surgery only in case they contracted COVID-19, maybe give them some options for teledoctor visits to cover the basic interest until they're able to bring him back as a full-time employee, giving him the comprehensive coverage they had beforehand. And so that's what we want to speak to you about, is the flexibility and the adaptability to when that happens and how that all comes together.
So let's kind of set the tone on, the average, small business or even large business. But again, our focus is more on small business. The average group plan that they have in place right now is a traditional plan. So some of the stuff that's happening when people are being furloughed, as you referenced, the employer is able to extend the coverage. But you have, we're now at the point in time where some of those furloughs are becoming permanent. People are being laid off, or people were already laid off before. So what are the options that these folks are left with? They can go Cobra, which I don't know who out there has their own experience with Cobra, but if you do, you know the Cobra is supremely expensive. And, this is in light of people losing their incomes. Let's keep in mind. So Cobra is one option. But even that's going to have particular limitations. You can only carry it for so long. Other things like that. Of course, the cost I reference, and you're basically stuck with the same plan that your employer offered before. So you don't have the ability to change anything. Or the other option, people can go to the marketplace, go on the Affordable Care Act site. It's a plus for a lot of people. If they just lost their job, their income is low, so they should qualify for a subsidy. Now, depending on the state, there can be some gotchas. We're in Texas, where the state did not extend the Medicaid guidelines. So in Texas, oddly enough, if you earn too little, you don't qualify for a subsidy because you should be getting Medicaid according to how the law was written. So a lot of people, they can go to the marketplace, get a subsidy, but there's complications with that as well. What happens when you get rehired? Well, now your subsidy calculation is going to be wrong. So now your tax bill is going to be affected accordingly. And number two, you're limited to the options on the marketplace. A lot of people like PPO coverage. That's what they're used to. That's what a lot of businesses carry. And if you go to the marketplace, you don't have PPO options. So, even if you can find a plan there, you may be, kind of limited by your choices, things like that. Or, you have people that'll go on their spouse's plan, if the spouse is still employed. So that's an option a lot of people are using. Another downside with that, however, is it's usually going to be much more expensive, because companies on average don't cover dependent costs. So, even if you can get your spouse covered on your plan, you're still going to have to pay that premium, which you probably weren't paying before because the employer was covering it. So that's kind of the reality a lot of people are facing right now with the traditional plans. This is another kind of unique angle in which Cal alluded to here a moment ago, how we can really kind of problem solve in situations like this. One additional way that we consider our coverage and our options to be flexible. So with that being said, Cal, maybe give some more detail on, how we can go about that. I know you mentioned kind of mixing and matching the coverage, but, maybe give us a little bit more in depth on that.
Yeah, absolutely. Let's go ahead and dive into those numbers you talked about. So at the end of the day, if we're talking about a small business employee that's in fear of losing the job, what's the options when that happens? And the two main options you talked about just a couple minutes ago was either going on Cobra or going to healthcare.gov and potentially receiving a subsidy. Well, let's talk about Cobra first. And you had mentioned it's really expensive. I would say that's an understatement. So essentially what happens is when employees extended insurance, the employer is going to pay at least 50% of the premium. So from the employee's perspective, the Cobra is minimum doubling the cost that they were paying with their employer. Now they have to pay that on their own, and it's only good for, I think it's 18 months or under 2 years.
Or a lot of people, the
So
employers are paying 100%. So it's all costs
yeah,
now on the
right.
employee.
Yeah, well, yeah, right. At a minimum of 50%, right? So they could be paying a lot more. So yeah, their premiums should go up 300%. I mean, imagine your employer's taking out, $200 per month out of your check for you having a coverage. You're 45 years old, and you find out the next month that it's going to cost $750 a month for Cobra. You're going to start looking for other directions.
Yeah. Or how
So
much
the
the
other
average
direction.
PPO, family PPO is 17 or 1800. Yeah, I mean, who can afford that when they just lost their job? Who can afford that? Period.
Right, especially yeah, right when their family was only paying, $800 a month, if not less, with their employer. So when they at that point they're going to realize, well, maybe I should go to healthcare.gov, and then if they may be able to get a subsidy with their healthcare plan or a government credit, depending on what kind of income level you're at. But as Demick had mentioned on the last time he spoke, he talked about that there could be a tax credit on that. What happens is when you're receiving a subsidy, they ask you to project your income for the rest of the year. So if you're sitting in March, you got to think, well, what am I going to make from now to December 31st? If that income is short, then you end up making more than that. That means that they gave you more of a credit for the subsidy than you should have gotten. So what'll happen is they'll come tap you on the shoulder at the end of the year and say, hey, you owe us X amount of dollars, depending on what that differential is. So if
We paid
someone
you too
projects,
much on the subsidy.
right, pay you too much on the subsidy, exactly. So on December 31st, if you had projected 35,000 a year and you end up making 50,000, you're going to have a chunk of change to pay back the federal government for that subsidy differential. So it's a very it's a
That's a
guessing
problem
game
a lot
almost.
of the self-employed individuals already have. That's one of the common things that we encounter with people that have those plans, particularly people that are earlier on in their businesses when their income is unstable. How many times have you heard that story where someone, their income is at one point when they got that coverage, and then by the end of the year was they actually made more than they anticipated. Now they had to pay that back.
Or they're trying to play another game where they're trying to adjust their expenses to try to match what the taxable income is. You know, you can take a cosmetologist, for example. They have a lot of expenses. They have the chair fee. They have the fee they pay to the salon owner. And these are all expenses that they write off. So depending on what happens in the economy is going to depend on how many people are going to go and get their haircut. That could be a difference of 15, 20,000 a year in what they report to the federal government through healthcare.gov. That's a big chunk of change on top of the taxes that they're paying, especially being self-employed. So what Dimmick and I want to do is we want to talk to those individuals and say, look, you can guess all you want. And even if you do guess, you're only going to have access to 2 or 3 different doctors if you take an HMO through healthcare.gov. So what we do is we set them down with customized solutions to patch in what their immediate needs are. Well, most of the small businesses that we speak to or the subcontractors that we speak to are only going to see what the direct threat is in front of them. And for most people out there, it's either an accident or fear of contracting COVID-19 and being hospitalized. So if you become hospitalized, how are you going to pay for that? Well, one of the things that Dimmick and I help out with are small businesses and subcontractors putting in hospitalization and surgery insurance that will cover your hospital stay without having to put a deductible down for over 180 days. So this is something that they can patch in that's only going to cover them for the surgery and for the hospitalization to give them that chance to adapt in the periods that they may not have employment or they're waiting to go back to be employed. So again, it's all about the flexibility on how all that comes together.
And
Dimmick,
this is
anything you want
great
to add to
for
that?
yeah, this is great for small businesses in particular because I saw some stat recently that I want to say like over, well, they were saying 200 employees or less. I mean, we're more focused on 50, 40 or less, but at least 50% of small businesses in that range don't even offer health coverage. And these are some of the reasons why, just, you know, some of what we touched on our last podcast and then ones we'll touch on going forward, but cost, inflexibility, you know, all these things and all these things that we want to kind of help them address. And here's a perfect example. You know, maybe that business can no longer afford to contribute $500 for their, you know, furloughed or terminated employees coverage. Well, I guess furloughed realistically, you know, they people they anticipate bringing back. Well, we can show them how to readjust that coverage to where that commitment's only $200 a month, and that employee can still have, as Cal referenced, catastrophic benefits or outpatient benefits, preventative. So you still have some level of protection without having to just basically go all or nothing, right?
Right, exactly. And that protects the employee's needs, knowing that their immediate threats are being covered, and it protects the employer's needs from bringing that employee back, not having to recruit, depend on someone new walking in the door, hoping it's going to be a fit. You know, these employers, from the employers that we've spoken to, they value their employees, and this is you know, health benefits are supposed to be a reward for a hard work done, for a good job, for being profitable. And all too many times, we're talking to you know, employers and employees alike that are disgruntled. They've seen their premiums jump up 20% a year. They've seen their deductibles skyrocket. They've had to change plans 3 out of 5 years or 4 to 5 years. So we want to put an end to all that, something that you can have long term. If times get tight, we can make the adjustment, take away as much coverage as we need to, and then immediately add it back on as the economy picks back up. You're not pigeonholed at any time of year. So it's about the flexibility on how to maneuver during these times. And of course, having the right plans to the right specialist if you ever need it.
Yeah, and this all kind of ties into our concept of health insurance 2.0. You know, we kind of came up with this concept of an elevation or evolution of health coverage. And then these are a lot of the reasons why, you know, a lot of the examples why we feel that, you know, that this evolution is superior. You know, the flexibility of coverage, you know, even something that we hadn't touched on yet in this conversation, you know, for the employees that are furloughed or having their incomes reduced or eliminated, think of how powerful zero deductible coverage would be in that situation. It's in concept, it's all well and good to have coverage with a low or no deductible, but how about now when something major happens and you have no job, you have no income coming in. So that's just, one other powerful element of protection that we build into these plans. It would, again, just trying to elevate everyone's coverage and get everyone to a better place with this approach.
One last thing to keep in mind is that when you're a subcontractor, let's be real, many subcontractors out there don't have an option but an HMO. So most small group health plans require minimum 2 employees to be on the plan. They're not going to allow a 1099 employee on a group health plan like that. You're going to need to show that you're affiliated with the Texas Workforce Commission before they're going to extend you an invitation to participate.
So say, how many people have we encountered that have jumped through all kinds of hoops to meet those qualifications just to try to get that traditional group coverage? The people that hire their
I'd say, yeah,
spouses,
75%
hire their
of them,
family.
right? 75. Yeah, no, 75% or so, I would say. Yeah, so what's great about what we offer is that we can extend PPO coverage and these type of solutions to both families, subcontractors, and small businesses. As far as your company paying it, that's just an extra form we add to the application. And as far as we're concerned, we just need to know which account to pull the funds from. So we don't have those restrictions, those gotchas, so to speak, because it doesn't matter. It seems like whenever someone's getting laid off, it's at the worst possible time, to where you only have option A or B. We want to let everyone know that you now have options C, D, E, and F as well, and that you have several options to pick from. But it's amazing how many people we speak to thinking that they have to follow a certain type of coverage. You don't. You have several different options that'll even give you better coverage than what you may have with an Affordable Health Care Act policy, simply because we're not one-dimensional. We're customized from the ground up. But yeah, it's all about flexibility and having the options that you may not be aware of.
Yeah, customization, flexibility. Right, as you said, just said the options that most people don't know that they have. That's really kind of why we trumpet our message as hard as we can, because most people don't know these options exist. Outside of that, I think we're kind of getting close to the time that we allotted here for this talk. So I don't know if you have any final points or anything, Cal, but hopefully throughout this conversation, anybody that's listening or watching out there is able to get some enlightenment or, so some input that helps them going forward.
If you are a small business and you did receive an increased renewal rate, this is the prime time of year that's going to happen, go to our website, CustomInsured.com, and we have a free quote calculator where you can see what kind of a budget we work with and then what the next step is. We can address that after we've established what the budget is. So please check that out. Let us know if you have any questions. We'd love to be able to speak to you about that.
Yeah, that quote engine's obviously we're the ones that created it, so we may be a little partial, but yeah, it is pretty awesome. You can go on there and plug in all the info. You can quote a whole group, quote a family, quote an individual. For an individual or family, you're looking at 2 minutes, 2 or 3 minutes, and it'll spit out a real price at the end of it. So definitely, there's no risk or anything like that. We're not going to sell your info or anything. We're trying to put some numbers out there, make it easier for people.
And on top of that, it's all very secured. All the information is not going to be shared with anyone, or no one else is going to have access to it.
Right. Yeah. We're local, so we can appreciate that. Outside of that, we do appreciate, as always, those of you listening and watching. As I mentioned, hopefully we gave you some good enlightenment, and we'll look forward to speaking to you on the next one. Take care.
Take care, guys.